Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update on Mako Mining. Mako Mining is traded on the TSX.V under the ticker MKO and on the OTCQX under the ticker MAKOF. Joined today with the president and CEO of Mako Mining, Akiba Leisman. And Akiba, it's great to get you back on the show. It's been a little while, but you've had your hands full with acquisition, which you just closed in March with the Moss Mine in Arizona, and you've got a lot of financials that you filed over the last month or two. Let's just take a quick look back at the 2024 year. It was a record year for the company. It was a transition year for the company. You had two different acquisitions that actually were announced that year. I know that, as we just said, that the acquisition of the Moss Mine took until March before it closed, but you announced it the very last day of last year. And from a financial standpoint, the company had a bang up year. The adjusted 2024 EBITDA was US 42.2 million, and that was with an average gold price for the year of 23.97, so about $2,400 gold. A great year. Obviously, we're looking at different gold figures as we have entered 2025, but when you look back at last year, anything you want to say as far as from a high level on the financial or operation side of the business?
Yeah, I mean, from a corporate perspective, like Mako was an entirely transformed company between the two acquisitions that we both completed and announced. So we announced the Gold Source acquisition in February, and we completed that in early July. And then we announced the first stage of the Moss acquisition post bankruptcy on New Year's Eve, 2024, and then completed that at the very end of Q1 this year. So when we file our Q1 financials at the end of the month, this will be the first time that the Moss balance sheet gets integrated into the Mako balance sheet. Now, even with that integration between those two pretty material acquisitions, we only wound up issuing just over 13 million shares to acquire the 1.8 million ounce in all categories from the Eagle Mountain project. That's actually a very well advanced project in Guyana. And then from the Moss acquisition, for those that have been following it, is that if you actually add up all the bells and whistles and the residual leach cash flows that come from it, by the time that we acquired this asset at the very end of Q1, the net purchase price was only US $2 million to acquire basically a fully operational mine that's going to be turned on from a full mining perspective the very end of May, so about a month from now. Not all of this was intentional in terms of timing the gold market, but certainly you couldn't have asked for a better time transaction. And given the purchase price that we had in relative to where gold prices are trading at right now, this is going to be one of the most accretive transactions that have been done in mining, and certainly in my career, and certainly observing other people's deals throughout that time frame as well. Now, from a financial perspective, irrespective of all those corporate activities, we do have a fully operational mine in Nicaragua. When it runs the way it's running right now, it on average for a year generates like around 40,000 ounces of gold. I think we just sold right around 39,000 ounces for the year, which is roughly the same as we did in 2023. And as you said, at $2,400 gold, we generated $42 million of adjusted EBITDA. And then for your listeners, really the only material adjustment that we make on that is really to not include the expensed growth exploration that we have, because that's actually a part and parcel to kind of our organic growth within the company. So it's important for shareholders to see exactly what's going on with the mine. Now, at the end of Q4, where our average gold price was in, trying to actually think exactly where we are. Things have been moving like so fast from a gold price perspective. But in the context of about $2,600 gold, somewhere in that neighborhood, we were able to generate about US $15 million of mine operating cash flow. And then in Q1, we just announced that our average gold price was 2,900, almost exactly 2,900, generating roughly the same number of ounces produced. And you can envision that given the fact that we really haven't changed our balance sheet all that much, the cost structure is basically the same. All of those changes in gold prices are going to have an immediate effect on both the top and bottom line, and certainly from our cash balance perspective. So the interesting thing with about Mako is that I have like all these apps that go track our bank accounts. And Some of them are consolidated at the Canadian level, and then some are at the subsidiary level. So it takes me a while to click on everything, and then when you add up everything mentally, it's like, oh my God, look where our cash balance is right now. So I think one of the issues that investors have when you have such one-sided volatility in the market for the commodities like this, for an unhedged producer ourselves, is that a lot of the financials that we put out, so for our Q4 and audited 2024 financials, and what will eventually be our Q1 financials at the end of May, once we integrate the MOS into our accounting over here, it's a little bit stale in terms of what's going on. So our average realized gold price in Q2 so far has been about $3,300 an ounce, thereabouts, maybe even a little bit higher than that. So you can actually see that it's having a material effect on the financial strength of the company that puts us in a position to eventually build the Eagle Mountain project starting next year, and then also putting ourselves into an opportunity to look for more very accretive acquisitions.
Yeah, it's a good problem to have, a higher and higher gold price each quarter, adding in revenues that maybe weren't anticipated when you were modeling out how things were going to go earlier in 2024, and definitely as we've rounded the calendar into 2025. Yeah, I'm looking, Akiba, at your Q1 2025 highlights that you put out to the marketplace on April 21st. And in the Q1, your average price was 28.98 per ounce at San Albino, and at the Moss mine, there was still some residual leaching at 29.97. So if you think around $2,900 gold, as you stated, you ended up having revenue in the first quarter of $31.5 million. That's a bang up first quarter, and you can only imagine how Q2 is setting up. I guess anything else you want to say about Q1, because you started to integrate Moss into some of those operational figures. Obviously, you're going to kick on the mine again later in the month of May here. But anything else you want to say about Q1 as you look back at the first quarter?
Yeah, so I mean, Q1 as Moss gets integrated, I mean, like so Q1 from a financial perspective is like it's kind of like a heroic effort for our finance team to actually put those numbers together so we can file on time at the end of the month. It was totally my fault because I really wanted to close the deal in Q1, but I did it in the last couple of days, so it kind of needed to light a fire on everybody's butt just to make sure that we had the consolidated financials done on time. But the interesting thing is that when you're dealing with a bankruptcy acquisition, like you have with Moss and specifically the subsidiary that we acquired, Golden Vertex, as part of that bankruptcy process, initially through their bankruptcy and then eventually at the same price through the controlling shareholder Wexford, is that there was a lot of assets on that balance sheet. I mean, they were holding leach pad inventory at over $30 million. They were holding mineral property interests in the 20s, PP&E, and then also around like roughly 20 million. So you're talking about like actual asset line items that were going to be in the amount well into the $70 million range. We did not purchase this for $70 million. We purchased this for net two. Now there was still some liabilities associated with the reclamation that we actually needed to have for the ARO liability that we had on the balance sheet. So we're kind of working through that right now. But irrespective, it's actually going to be difficult for our accountants to take a look at this without actually taking a gain on the assets. We're actually like trying to avoid doing that. So the interesting thing about buying an asset so cheaply is that it actually causes some issues internally about what exactly and how we're actually going to be marking all of these line items on the balance sheet that we're kind of focused on right now. Now, from an operational perspective, there's a total of like about a little over 1,600 ounces that were effectively sold in Q1. All of the ounces that were sold prior to the acquisition being complete, a little over 600 ounces, are not going to be treated as revenue, and the 900 and change ounces that were part of that residual leach that were sold after the acquisition will be treated as revenue. So there's still going to be kind of like things that are going to be going into the revenue line item, is one of the reasons why we generated record revenue in Q1. Q2 is going to be a little bit different. So we just announced our preferred bidder for the mining contract. So we'll formally execute that probably over the course of the next 10 days. And then they're in the process right now of mobilizing. They'll get initial equipment to site probably second, third week of May, and then they'll probably have enough kit to start the ramp up of mining operations the very, very end of May, like literally the last couple days. And then for June, we're going to be mining full time again. It's a heap leach, so it takes time to recharge the pads and eventually ramp up to full production. And then there's a lot of things that we need to work through in terms of what elevation and moss left over. So before we actually start accessing the really good parts of the mine, or at least the relatively good parts of the mine, we'll take some time and doing some pre-strip work and things of the sort. So it'll take time to fully ramp up, but we fully expect that this is going to be in cash flow. I mean, it's in cash flow right now. It generates cash, but after we actually start expensing some of our mining costs over here, we're going to be in cash flow within a month from this asset. And like I said, this has become what I think is an unprecedented transaction for the purchase price paid versus what this actually can contribute to the company, given where gold prices are today, gold and silver prices are today.
Well, I do want to get into Moss just here in a second, but just before we do, just before we wrap up the Q1, I think it'd also be nice to give people an update on Sailfish Silver loan that you paid 40,500 ounces of silver into, but then also paying back Wexford. So maybe just talk a little bit about some of the payments you've been able to make in Q1 towards some of those agreements.
Yeah, so the debt on the balance sheet of Mako. Well, I mean, one of the things that I'm actually most proud of about Mako is that for junior mining companies such as ourselves, especially for small mines, and then also coming from our private equity background, is that A, we don't overcapitalize our balance sheet. So we have a capital need and we finance that amount of capital. With that, the last time we raised equity capital at Mako was almost 5 years ago in July 2020, which was about a year before the mine declared commercial production. And the last time that we took any capital, any additional capital, was in February of 2021 with a third-party debt facility that was issued in February, about 5 months before the mine turned on. And after the mine turned on, hey, look at that. We actually generated cash that actually wound up repaying the entirety of the principal balance of both of those loans. One of those loans was refinanced into that Sailfish Silver loan that you referred to, which has now been fully repaid through cash flow. We were able to reinvest close to US $40 million in exploration over the subsequent 4.5 years of production. We were able to increase our cash balance sheet from effectively zero to a pretty healthy amount. We publicly disclosed our cash balance at nearly US $15 million recently. I can tell you right now, it's a lot higher than that as we speak. We've also repurchased close to US $7 million of debt associated with that. So the refinance of one of those outside party loans was through an affiliated company, Sailfish, so the royalty company, that wound up refinancing that as a 24-month monthly payment of 13,500 ounces of silver. And then that 24th and final month was a week ago. So as of last week, so when you see our Q1 financials, there'll still be 1 month left. But as of last week in April, that silver loan has now been completely extinguished. As part of that agreement, Sailfish did have an option to acquire for US $1 million the life of mine silver production that was coming from the plant. And this is actually, it was confusing and still is confusing to people. The silver loan was structured as 13,500 ounces per month. So 13,500 ounces per month. The net production from San Albino, given where our silver recoveries are roughly 3,000 ounces a month. So the effective contribution of silver going forward to Sailfish is going to be about 10,500 ounces less than what we've been paying Sailfish over the course of the last 24 months. So it's still an obligation going forward, but it is materially less than what it was before. And obviously, that's going to help clear up a lot of our financial obligations to outside parties. And we can use that to grow our cash balance to continually reduce the required equity contribution to building Eagle Mountain once we start construction in early next year for that project.
Okay, well, I appreciate you breaking that down, and that is interesting. I was wondering what the discrepancy was there as far as the silver that you've been paying Sailfish versus what it'll be moving forward now that you've extinguished that. And so it'll be a little less than what people are used to. let me also just check in on San Albino because I think a lot of people want to know that's been the workhorse for the company. It's generating the lion's share of the revenue right now. So before we get into the other two projects, how are operations going at San Albino, and do you anticipate roughly that 40,000 ounces of gold again for this year, or is there any opportunities for growth?
Yeah, I mean the opportunities from growth is really to see how the underground is gonna work, right? So if you ask our COO, Jesse, he's like super enthusiastic about our ability to do underground. And then once we actually prove conceptually that it's economic, then it actually becomes a lot easier to justify expanding everything. I'm taking I'm taking the position that the underground should be there as to prove that we can sustain our operations at the roughly 600 tons per day as it is right now. And then once we actually demonstrate that that's actually the case, then we can reevaluate. Like, as most people who've been listening to the Mako story for a long time, is we actually got permits to go up to 1,000 tons a day effectively at our plant back in 2021, I think. So it's actually been almost 4 years. The reason why we haven't chosen to complete the small amount of capex that we need to get to that level is just because it was always difficult for us to prove out a resource that was suitable to us to justify depleting the mine at 1,000 plus tons a day. So we are operating at roughly 20% above nameplate capacity. So we built the original plant at 500 tons per day, but we've been pretty consistently running it close to 600 tons a day. And then if we actually have enough resource in front of us, there's actually a pretty low hurdle rate for us to get, both in terms of actual cash and certainly from a permit constraint perspective. It's a very, very low hurdle rate for us to get to doubling that. But it really is going to be determinant on whether we can prove that the underground not only is there, that we can control dilution, and then eventually to kind of use our actual infill drilling program, so we have confidence for our ability to deplete this mine faster than we are. So I wouldn't anticipate any like major increases in production thresholds for at least another 2 years. But after that, and we can prove this concept, then yeah, no, it becomes a lot easier to prove out ounces when you start including that underground. So San Albino, it's actually another interesting anecdote about this is that because we're gonna effectively build the largest of our properties in Eagle Mountain next year, which we have like a headline capex rate on that of US $96 million, is that this is really the first time that we need to show outside people, whether it's lenders or bankers or anybody from that perspective, the integrated model over here. Something actually kind of weird happens when you're dealing with 3,300 gold and you run it through our models. It actually winds up showing that San Albino is actually the least valuable of our assets that we have in our portfolio relative to Moss and then Eagle Mountain, right? And the reason for that is because it's actually difficult to prove out a large scale resource. It's difficult to include in a third party financial model. Anything that you can't actually vet and audit and actually show people that these are real and not speculative ounces coming out. Now, I can say for a fact that even though San Albino comes out as the least of the valuable of the three, from an actual like importance level, from a reality perspective, it's a lot more important than that, right? As in 2024, it was 100% of our cash flow. As of today, it's probably 95% of our cash flow. As of the end of the year, when Moss gets fully ramped up, it'll probably be somewhere in the neighborhood of about 60% of our cash flow until Eagle Mountain comes online, in which case that obviously will be the workhorse of the company for many years to come once that's in production in 2027.
Well, I think you've mentioned in the past, Akiba, that the nature of the beast with orogenic gold systems in Nicaragua and just any orogenic gold system is that it takes a lot of drilling to try to prove up that resource, but there's plenty of mineralization there everywhere you drill. And you proved it last year a couple of times where people said, hey, what about this area? What about this area? You went over and put drills there, and sure enough, there's the gold. It's just a matter of you don't want to drill yourself into insanity just to try to prove up the resources. So I could see from a valuation standpoint to a financial institution where it would be harder to show the future, but I think people that have been watching you guys mine for the last 3 or 4 years, they can see that the gold is always there and you can continually feed that mine. So the mine life will always look short, but you can mine there for quite some time and you've got a big land package. But let's talk about Moss since that's the newest kid on the block here and it's going to be going into production the end of this month. What can you tell us about what is needed as far as capex to put into it? You say you're looking at the what elevation left behind before the bankruptcy. You bought this from Golden Vertex, but really it was Elevation that was operating it. What's the lay of the land there? What kind of work do you have to do as you start putting more and more material onto the leach pads? Is there anything else you want to say about just the ramp up process and what that'll look like?
Yeah, so a lot of the maintenance work, which was critical, I mean, they really kind of drew this drew this down too, and actually one of the there was a lot of reasons why we had to do this like rigmarole, like call it like a shark and bake transaction over here, where we had to initially place this asset into Wexford and then kind of go through the normal protocols and then buy back from Wexford at effectively the same cost. One of the reasons why we did this is that this was being managed so badly that we felt kind of nervous that if we didn't take this over within 10 minutes of that deal closing, there were going to be some issues. So we were fortunate that the bankruptcy judge gave his sign off on this at 11 a.m. It was actually after we put the press release out for Mako a few hours because I thought it was going to close on December 30th, not December 31st, but we missed the deadline for the bankruptcy judge on the wire deadline. So at 11 a.m. when the monitor got the cash payment over here, the deal closed. And then at 11:08, about 8 minutes later, we took over the reins of the operations and basically needed to clean house pretty dramatically. So over the course of those 3 months, there was a lot of maintenance that was done, all funded out of the residual leach. I mean that was the interesting thing about that. A lot of the critical items for the crusher, the plant was done. The leach pad was actually in very, very good shape. The systems in place to leach it effectively and efficiently were not. So we definitely made some changes over there, which certainly was helpful in terms of the amount of gold and silver that were being recovered through the residual program. And then we laid the groundwork for everything that was needed to really restart operations. We took down staffing partly from us and partly from Elevation during the bankruptcy. I think at one point they were running this at about 129 people. We took that down at one point to 28, so over 100 people were less. We've now ramped up our personnel at Vertex to the low 40s right now, and then by the time that mining is fully ramped up, not including the mining contractor, we'll probably be in the low to mid 50s. So from a G&A perspective, a lot has been reduced. Most of the stuff now is in control. We actually have a lot of consumables where things are a lot safer of an operation than it was, let's say, when this was being run last year. But there's still like this is if you actually go to site. I actually got a call from a banker yesterday saying, "Hey, do you want to like do a site visit and a tour with investors?" And I said, "Sure, it's actually easy. It's like outside of Vegas. I just want to like warn you is that you go to Nicaragua, that place is immaculate in terms of like every decision that was made in terms of how that operation is run. And then a lot of the decisions that were made over at Elevation were not. So we had some of our Nicaraguense folks from San Albino come to visit Moss, and they were shaking their heads. Is this what you do in the United States? This is not what we do in Nicaragua. So it's kind of funny to be criticized in that fashion. But so there's definitely going to be some improvements that are going to be made over time, but after the mining turns on. So we have a pretty clear line of sight without real material capital needs going forward, really for the next 3 years. And then one of the decisions that were made, partially Elevation's fault and partially not, right? So was that they took the approach really early in their life to try to avoid going through the federal NEPA process, this permitting juggernaut that really has slowed down a lot of projects prior to the current administration. And you can be somewhat sympathetic to that approach. Initially, they built a pilot plant between 2011 and 2013 exclusively on private land. And then when they decided to build this, say in a more quote unquote commercial fashion, they wound up limiting the scope of their permit to less than 500 acres. So it was about 493 acres of permitted ground. But in doing that, they constrained themselves quite a bit in terms of they were putting infrastructure. So you go to site, and I can't imagine that this wasn't known from the elevation folks, is that they built the plant right, literally right on top of over 100,000 ounces of gold. It wasn't even like from a geological perspective. You can actually see the vein running through it. So there's a lot of decisions like that that were made. Now, for your listeners, it's not impossible to move a crushing plant like this. It just like it takes a lot of work, and we'd rather not do that. So over the course of the next 3 years, there's definitely going to be a race of finding more material, which we're very optimistic that we're going to be able to find. But in a worst case situation, we can move the plant and then extend our operations to about 6 or 7 years when all is said and done. So there's like stuff like that, like over in the long run that we need to focus on. Again, all will be funded out of the cash that we'll generate, and obviously the payback on a $2 million acquisition is going to be very, very short when all is said and done. And I tell people we didn't pick up like in an exploration project. We literally picked up an operating mine that was cash flowing, right? So we actually have generated cash since we picked it up, and it goes back to there are a lot of folks that were critical of the deal because at the end of the day, Moss you wouldn't put as a world scale property, but one of the things that I think is lost on a lot of people who are involved in this industry is that an asset is only as good as the price that you pay for it. Now, there are some assets that aren't assets. They're just like downright liabilities. So I'm sympathetic to the approach that there's just some things that you don't want, and there's some things that are just can't be cheap enough. But if you're looking at your portfolio construction, what you're looking at from a corporate perspective or an investor perspective, say, wow, this mine is really good. It's got the lowest AISC on the planet. It's generating so much cash. But then you look at the market cap, and if you pay that market cap, it's just going to be generating negative returns. In and of itself, it does not become a good asset anymore. So I think a lot of the criticisms were in place over here is that people conflate where mines are in the cost curve in the industry instead of actually overlaying that with what exactly are you paying for and how are you commercializing these things when all is said and done. And there's also like another contingent over here is that Elevation was effectively an insolvent company based on their balance sheet, right? So all of that kind of got repaired through bankruptcy. It was cleansed. It was stuff that we didn't have to pay for. It was just completely was blown away the liabilities by the bankruptcy judge. So what we're dealing right now is a completely different corporate. It's a completely different mine, completely different G&A structure, and completely different way about how we're actually going to be mining this as well. So I think it's going to surprise quite a few people when we actually restart mining operations at June. I think there's a couple of things that people need to take a little bit of a breath on. One, this is a heap leach mine. It's going to take time to recharge the heap leach. It will take time to ramp up what we think is going to be a full-scale production schedule. Likewise, going back to that long-winded statement about avoiding NEPA, because these guys were permit constrained, there's a lot of decisions that were made over their operations that limited their ability to develop the pits in an appropriate fashion. So it's going to take some time for us to get to the relatively good parts of Moss as well. So I would say over the course of the first few months of the operation, we're going to be relatively lower grade than what the remaining life of mine is. But at the end of the day, these gold prices and silver prices, even that before we actually have a chance to kind of expand our permit areas with a much more conducive regulatory environment in the United States, it's still going to be like pretty extraordinarily profitable again relative to the purchase and entry price that we got into this thing. And then once we're actually unconstrained, this is just going to be, I think it's going to blow people away in terms of what Moss is going to be able to accomplish.
Yeah, and I appreciate. I was going to ask you about, considering the prior operator had challenges and the way they approached it, and I think some people that followed that story were confused at the acquisition. But you make a great point that the acquisition price is so much more important sometimes than the actually, the functional parts of the mine, because a lot of times people are overpaying for a quality asset, and as you say, it can actually be a negative return for a number of years. In this case, you're going to immediately have a positive return as soon as you pay off the $2 million. You got a lot of things wiped out during the bankruptcy, so that you didn't have to deal with those challenges from the prior operator. But what do you think this can actually produce in a rough sense? I know you may not have exact numbers on this, but once you get a couple of months ramped up, once you recharge the leach pads, once you know everybody knows it's going to be a ramp up story, so I don't think anybody's expecting immediate results. But let's just say by the fourth quarter of this year or the first quarter of next year, what could the production look like on a quarterly basis out of moths?
Yeah, so one of the issues with elevation and how they were handling data, the refinery and things of the sort, how they were mining and controlling things, is that it's difficult to believe a lot of the data that was coming out from the org. And by the way, it's not a unique characteristic in the industry. There's like yesterday was the final day that where people reported their financials. There's a lot of data out there, financial and operational, that it's tough to believe for obvious reasons. So that's my point there is that this, let's call it this low to mid point four grade that they were showing the market over the course of the last 5 years. I think there's a very high probability that those grades were actually understated in terms of what was really going on. And it all comes back to how you back calculate grades based on how much gold you produce, and also like how we're looking at the heap leach and where we're finding more ounces and things of the sort. I think there's actually like a reasonable probability that those grades were being underrepresented in terms of how they're managing the operations. So there's going to be a few things that are going to go on in over the course of the next 4 or 5 months before I really can directly answer that question. So the first thing is that we're going to be putting a Mako stamp on the resource. So it'll take some time. So probably in late August, early September to get that done. That will include a lot of our grade control processes in place. So number one. And then once we actually have something that we can define both in terms of our resource estimation, grade estimation, and then also from a realistic perspective of how we manage our grade control provisions, then we can have a realistic view of head grade. Now, from a plant perspective, they were averaging probably in the neighborhood of about 8,000 metric tons a day. I don't think it's going to be a problem at all to get to 10,000 tons a day for that plant, and there's probably room with small scale improvements that can probably get it up 10% above that. So from a production standpoint, in terms of where the grades are going to be winding up, it really is going to be related to what the effective head grades are, what the optimized recoveries are going to be. But don't take this as guidance. Take this as like back of the envelope arithmetic. If we can get this up to 10,000 tons a day, and this is going to be like a midpoint four type deposit based on our estimations for recoveries, yeah, you can get this thing on a gold equivalent basis somewhere in the neighborhood of about 40,000 ounces when all is said and done. It's going to take time to get there for the reasons that I mentioned, both in terms of the ramp up schedule, the normal ramp up schedule for a leach pad, and then also this some of these minor permit constraints that we have to resolve over the course of the next few months as well. But yeah, by the end of this year, early next year, that's going to be kind of like the throughput that if our resource update kind of holds up to what we expect, what we actually think this thing can probably be doing.
Okay, well, I appreciate you doing the back of the envelope one with us. That's all I was hoping for because I know there's still some unknowns, and like you say, you got to reconcile what is the actual grade going to be, and what are the metals recoveries going to be, and there's a lot of ramp up process here. But if we look at 2026, somewhere in that ballpark of 40,000 ounces of production is possible, and that would be on par with what you have from Nicaragua. So you got mine number one, mine number two going. Let's look at mine number three in the waiting in the wings here, and that is the development and eventual build out of the Eagle Mountain project in Guyana. Obviously, that was another big acquisition, as we mentioned at the onset from last year. What steps need to happen? What's the timeline look like to get it into production? And then what work will be done in 2025 at Eagle Mountain?
Right. So in terms of actual on the ground work, the first half of this year was focused on doing a lot of our geotechnical and hydrogeotechnical and hydrological work over at site, which was there for our permitting. It was there for site layout, like where we're actually going to be storing the waste safely, where we're going to be storing the tailings safely, et cetera, et cetera. And a lot of the actual physical work for that drill program is more or less complete. There's probably a little bit of little work that we need to do. And then from a government relations perspective, there's a few layers that we need to go through. The first is the submission of our mineral agreement. So we basically will be in a position to probably submit that over the course of the next week or so. And I think the government has it's a high priority to approve these things. Nothing is going to be that different than some of the off-the-shelf agreements that have been put in place, and that will define the economics of this. Approximately 3, 4 weeks ago, we submitted a notice to kick off our environmental permitting process. So it's very bureaucratic and formulaic, but it basically triggers kind of the formulaic schedule for the government. So for instance, we submitted our notice that we're eventually going to be applying for an EIA. In a couple weeks' time, we're going to get a visit from the Guyanese EPA, and they're going to come to site and say, "Oh, you definitely need to go and go issue your EIA." So very, very formalistic. I don't think there's going to be like any surprises that come from visits like that. And then we'll be in a position where I think all our data that we're going to be getting from our drilling program that we did earlier this year and kind of our engineering work that we did earlier this year, we'll be in a position to kind of like submit the final site layout, everything that needs to go, what the scope of the permit is going to be, probably in the context of like late August this year. And then it's just a question about like when they approve the EIA. So I don't think anybody within Mako is expecting the EIA to be formally approved until early Q2 at the earliest. That being said, and I encourage some of your listeners, specifically interested in Guyana, to look at what G Mining is doing with the Oko deposit. So their EIA has still not come in as a fully approved document. And it's behind schedule in terms of their previous public disclosure about it. But, and this is like the big but about them, is that the government has basically let them start construction before that. So it's like so long as you don't actually operating on an interim permit basis. So it's like, yeah, there may be some risk to and delay to when the EIA is going to be approved, but we can using them as an analog is like you can be conceivably starting some of that civil works and construction as early as December this year. I wouldn't bank on that, but the Guyanese government is very adamant about getting a lot of these projects off the ground because from a political perspective, it's very important for them to have a more diversified economy after they manage to find with their oil partners of Exxon, Hess, potentially Chevron, and CNOOC, that massive discovery that they made offshore. That they want to diversify their employment base over in Guyana outside the hydrocarbon business industry. So mining is one of those priority industries to do that, especially for the jurisdictions and districts that we tend to operate in. It becomes a very high political priority to get these projects up and running. So even if there are actual delays associated with the EIA, is that construction can start pretty early, given the analog for Oko at this point.
Well, and just quickly remind people, what is the rough time for the mine build, as far as it's envisioned? How long does it take to get it constructed and built and up and running and then ramping up? And then in an ideal situation, once you're past the ramp up period there, what is possible from a production profile on an annual basis at Eagle Mountain?
Yeah, so the construction time frame will probably be just under a year, so 10 or 11 months. It's probably a reason, assuming no financial constraints or anything like that. So the expectation should be a little less than a 1 year construction build out. The mineralization is right at surface, so it's not going to be that difficult to build up a reasonable stockpile before construction starts. I think it will be some, but not like an extensive ramp up period for the operations. And then we're designing this thing for a throughput weight based on our expectations for grade to have somewhere in the neighborhood of about 65,000 ounces a year of production, and figured that will start Q2 2027.
Okay, appreciate you breaking that. I'm just trying to give people the bigger vision here of when you have all three mines running eventually, a couple of years down the road, you got 40,000, but the potential for expansion at San Albino. So you could, in a couple of years, ramp that up to the 1,000 tons per day. But let's just use what you got now, about 40,000 a year from there. If you got Moss, roughly in the neighborhood of 40,000. and then you add another 65,000 here, you can see a mid-tier gold producer coming together here with all three projects. I think that we'll have to get back together and just wrap it up there for today, Akiba. But anything else you want to say, just really briefly, as far as upcoming catalysts that you want investors to watch out for, maybe in the near to medium term?
Yeah, actually. So what we didn't discuss is that a lot of our exploration over at Las Conchitas, over at San Albino, has been focused on getting the underground ready. So a lot of infill work, and then doing some regional exploration. But really, the impetus behind this was really just to make sure that we were prepared to go underground and make sure that we actually understood exactly what the geotechnical and resource constraints were when we first make this pretty big decision when we started digging our first portal in Q4 of this year. So there actually hasn't been like an actual exploration update for a while because there was really nothing over the course of the last 9 months that I would consider to be like material. So I say this as a preparation in that December last year something did happen, which is for the first time since 2009, we actually got an access and exploration agreement with the family that owns the surface rights, four generations of a family that owns the surface rights of what was always our second highest priority target, which was El Golfo, probably about 4 or 5 kilometers to the south of San Albino. So we did some mapping in the first couple months of the year, and then we finally got a drill rig on site 3 weeks ago. So we're on hole number 6 right now over at El Golfo. I've now publicly stated the first two holes have been rushed to the laboratory, and hopefully we'll get them back. I heard yesterday that they're actually in Canada right now to get a rushed assay back from them. So I'm pretty confident that we'll be able to get our first El Golfo results out this calendar month. Just because I'm tardy on everything else over at Las Conchitas. There's going to initially be an absolute data dump with Las Conchitas, and it should be treated as such. So that will probably happen over the course of the next couple of weeks, and then those El Golfo results, which do have the potential to be more material, will happen pretty shortly thereafter. Assuming like one way or the other, like obviously there'll be material in that they're good or material that they're bad, right? The assay gods are the final determinant on this. And then we'll have our Q1 financials. Literally, normally I don't like doing this because I think it's not a great sign when companies put out financials on the last day that they're allowed to. This is a different situation for us just because there's so much work to integrate Moss. So literally on the last 1 or 2 days of May, before the filing deadline, we'll put out our Q1 financials, and people will see what the operations are capable of doing at $2,900 gold. And then we'll probably give some snippets of what we can be doing at $3,300 gold, as the case may be.
All right, so a lot to look forward to, and maybe we'll get back together in a couple weeks then and do an exploration deeper dive, but then also touch on the Q1 financials. So maybe we can combine those into an updated interview in a couple weeks. And so a lot to look forward to as far as news flow from both the underground drilling, but also the El Golfo drilling. I know that's been a target you've been wanting to get on for years, so that's going to be exciting in Nicaragua. Obviously, a lot of ramping up still going on at Moss, and even some different work and de-risking going on at Eagle Mountain. So a lot going on with Mako Mining, and if you want to keep tabs on all the news flow, definitely click on the link below the show notes. That takes you right over to the website, straight to their news section, where you can follow along with this news as it starts dropping. I think we're going to have some data dumps, as you just mentioned, so definitely some things for investors to dig through. Thanks for coming on the show, as always, Akiba. Yeah, let's get back together in a little while and do it again. And as always, looking forward to our next conversation.
All right, perfect. All right, thanks, Chad. Appreciate it.